statute. That means whatever is required for that, everything comes from law. But for internal audit, this internal audit goes beyond the regular law. It can get into any nook and corner of the entity. Statutory audit, if there is a process or a program that is not coming into the financial statements, they will not be concerned with it, and they will not carry out the assessment of the cost and all. They will simply rely on the reports and they will say, okay, this is the report, this is our report, that's all. This is the number coming here, this is, we give a true and fair view statement, that's all. The work of statutory auditor ends there, just to verify the true and fairness of the financial statements. But what happens with the internal audit is that they go ahead, step into the shoes of the management and try to look at the business and see what better can be done. There are many examples of internal audit, doing a lot of cost cutting, saving a lot of people. See, even for this, during Corona times, we were approached by 3-4 companies, very large companies here, for cost cutting. They wanted to close certain divisions. They wanted to remove some people. So what they have done is they have approached us asking for the quotations for this whole project. So what was the scope of that work, Abdina? You have to be the internal audit head over there. Our company will be the internal audit head over there, and then we will completely review. They will select certain departments. So we will sit with each and every department, and we will see which person has to be retained, which person will not be required to be retained. So there will be a detailed discussion as to what exactly their role is, what is their contribution, what exactly they have done. So from their perspective, we will evaluate. From company's perspective, we will evaluate. All of this stuff is done, and then finally, the list of people to be retained or removed will be decided. But this is kind of something that will bring. There is a possibility to bring a wrong name to the organization. So we did not take that assignment. But I'm just telling you this because this is what internal audit is. You can get into anything, okay? And that is where you actually learn the business. So if you ask me to summarize internal audit, in the previous class also I said, it is all about GRC. G stands for governance, R stands for risk management, and C stands for control. That is the internal controls. So governance, Abdina. Who watches the watchman? That is the question. Now, management is the one who is running the organization. Who watches the management? Someone needs to monitor the management, so that people need to ensure that the management is also performing as per their KPIs, right? They will be given some targets. They will be given some, job description, which will say that in 5 years you need to do this, in 2 years you need to do this, in this year you need to do this. This division, so much cost cutting. This division, so much sale increase, so much of revenue sources increase. All of that, so much of customers increase. All of that will be targets for the management also. So, who watches the management? That is where the internal auditor will step in, and the governance part is, we as internal auditors will try to step into the shoes of the management and try to look at the company from the owner perspective. From the owner's perspective, if I was to run the business, how will I do it? Whether I have done justification to this management, whether I have done the running, whether I have run the company as per the regular norms, regular accepted norms, whether I have done any illegal activities, everything will be scrutinized at that point of time. So governance is basically the people who are running the company, the people who are governing the company. It is not government, it has nothing to do with government. If you remember, we keep using the word those charged with governance. Those charged with governance, Abdina, audit committee, cost committee, CSR committee, compliance committee, legal committee. இப்படி இந்த management will suggest what to be done, and these committees will be the ones who will be implementing them. So where the committee is not there directly, the management will be the one who is doing it. So when you talk about governance, it is the people who are governing, that is, who are getting the work done. Who will get the work done? It is the management which will get the work done. So that is governance. So as an internal auditor, you get to do so many stuff like that. You get to recruit management people. Recently, we were doing one review of a job description and some profiles for a GM role, general manager role. So there we will sit with the general manager, understand his requirements, understand his experience, whether he will suit everything. So there the targets have been established, and this guy has to come in and perform. And after 2 years, again we will step in and see whether he has performed as per the agreement or not. So based on that, his bonuses, his salary increments, everything will be decided. That is governance. It could be at the point of recruitment. It could be at the as an ad hoc investor requirement. Anything management can be audited at any point of time by the internal audit. It is just based on when they are hired. Next is risk management. The concept of risk management is simple. For everything we do, there is a risk involved. Business itself is full of risk. The moment you put money somewhere, there is a risk that it will not come back, isn't it? So when you have a big organization that is running and self-sustaining, obviously there are a lot of things that can go wrong. So as a management, by default, it is their responsibility to ensure that the risks are reduced or mitigated. That means if you are riding a bike, you take all the possible precautions, wear helmet, follow the rules, ensure everything is in hand, keep enough petrol, keep the bike maintained, have adequate insurance. All of this, you buy a good bike. All of this you keep in mind. You keep them, parallelly running in parallel to the operations. All of these things will reduce the risk to the maximum extent possible. You be within your speed limits, you follow the traffic rules. All of this will reduce the risk of many things, either with respect to the money or with respect to the police or with respect to any accidents or whatever it is. It will reduce the risk, but it will not completely nullify the risk. That is why there is a requirement for a third party to come in and check if the risk that has existed, has it sustained, or has it been gone, or has it impacted the organization in any manner. So how do we do this? How do we assess this risk? Simply by looking at the documents, by auditing the documents, by auditing the outcomes, by auditing the financial statements, by auditing the processes, by auditing the people, by reviewing the costs, by verifying the sales. So we are moving not just from, we are doing not just the financial statements, we are directly getting into the process itself. We are going to the operations side. We get into the operations, see what are the areas where they can reduce these risks, in which ways they can reduce these risks. So this is basically the risk management. And large scale organizations, by default, they have to use something called as enterprise risk management. Enterprise risk management அப்படின்னா, at an individual level, there will be certain risks. At a manager level, there will be certain level of risk because his department will be included. At the head of the department level, there'll be multiple managers and there'll be so many people involved. So the head of the department, it will be department level risks that he will manage. Similarly, as you go upward, there'll be a lot of risks that will get accumulated, isn't it? It is not one single risk the organization will face. There is a credit risk, there is a financial risk, there is an operational risk, there is a EBIT risk, there is sales risk, there is risk of natural calamities, everything possible you can imagine to be happening at an organizational level. That is why they need to have this tool in place called as enterprise risk management, wherein a chief risk officer will be appointed, and that person will constantly evaluate whether the internal controls across the organization are adequate or not. They will keep verifying one department after the other across the year, so that they are sure that the internal controls are being properly followed. If any new process has come, if any new change has come in the organization, because of the software, there will be sometimes changes in the organization. Because if you take Tally and if you move from Tally to SAP, there will be a significant change in the operational process, because SAP by default requires you to have 2 or 3 people authorizing everything. So in Tally, you can just have one person and get it done. Even the person these things cannot be done in SAP. That is why the very process in which the organization runs changes when there is a change in software. Okay. So when these changes happen, what is the thing that needs to be done? When there is a new division, what is the thing needs to be done? When there is a division that is removed, what are the risks that you can face? How to mitigate them? Everywhere the risk committee or risk department will come into the picture. So even if there is a risk committee, risk department in place, there will still be an internal auditor who will come and evaluate the work of the chief risk officer. Next is internal control. Whatever is applicable for risk management, that is pre. Before you carry out the organ activities, there are certain rules and procedures. There are certain uh, documents that will be established to say what is the procedure to be followed. That is what risk management is. If you follow this procedure, we will be ending up with the least amount of risk. That is what we are trying to establish. But the actual activities will take up, and there might be some deviations, isn't it? There might be deviations for good reasons, for valid reasons, but there might also be deviations for invalid or bad decisions. So we will do the internal control verification to see whether it was as per the documentation, as per the agreed procedures, as per the established procedures, or not. If you take example of Accor is a group of hotel management company from France. They are extremely good at managing hotels. So their SOPs are very clear. So they will have an SOP, they will have a dress code for each and every single department in the hotel industry. So what happens when anyone ties up with Accor is their SOPs are very standard and internationally the same standard is followed, and they will not touch small hotels. It will always has to be big shots that needs to tie up with them. So wherever you go in anywhere across the world, Accor will have one standard SOP. So that is basically your risk management, ensuring that this SOP is in place, ensuring that this will actually create value for the business, ensuring that this is communicated across to all the people. This is all about risk management. And then there will be an actual operations. The operations will start, and then people will keep using their they will go through the daily operational procedures. They will use the documents, they will approve the documents, they will sign the documents, they will prepare POs, get the goods, sell the goods, invoices, everything. There is a procedure which will be followed as per the SOP. But if there is any deviation, or if there is anything, then this that also needs to be approved, documented, everything. So if you are verifying the internal controls, it means you are coming afterwards. If you are doing the risk management, it means you are coming before the process. That's the only difference between risk management and internal control in this perspective. Okay, so let's look at the further. So, what exactly do we do as an external auditor? What exactly is expected of us when it comes to the internal audit function? Because if there is an internal auditor in the organization, definitely there are certain things that we can take from them, isn't it? Because they would have already carried out certain activities. So, instead of getting a duplication out of them, we can just get the work of the internal auditor. So, first option, determine adequacy of internal audit work for external auditors' purpose by evaluating the following. So, if you decide to use the internal auditor's work, internal auditor has already carried out certain activities, and you are trying to assess whether that work that the internal auditor has done is adequate for our purpose or not. Let's say they did some tax evaluation. Okay. Now, tax on the internal auditors may not be very strong. What is that? Very strong with respect to the exact sections, exact numbers to be applied, exact areas of tax planning. All this, the internal auditors will not be aware. The best person for this will be the tax auditor, isn't it? Or the tax consultant, if there is a separate tax consultant. They will be the best persons for this requirement. So you as an internal auditor, you as an external auditor, if you're trying to utilize the work of internal audit for taxation review purposes, obviously you need to first ensure that the people who have carried out that work are really good at that process, isn't it? So if you were given the choice between using the tax consultant's work and using the internal auditor's work for the same tax calculations, tax reviews, everything, obviously, as an external auditor, you will prefer the work of tax consultant over the internal auditor's work, isn't it? Similarly, there are areas where In statutory audit, there is a requirement for the statutory auditor to comment on the adequacy of internal controls across the organization. And in these cases, if giving a report saying the internal controls across the organization are adequate, obviously the external auditor will by default rely on internal auditor's work because internal auditor is an expert in that area. So when you are trying to utilize the work of an internal auditor, this is the things that you need to first evaluate. Objectivity is whether the person is independent or not. The reason they talk about the independence is because sometimes internal audit is in-house, sometimes internal audit is external. Why in-house? Because there are organizations which recruit a internal auditor as an employee itself. So when the internal auditor is an employee, there might be certain things which will not be strictly followed because management is the one which is paying the internal auditor. So the internal auditor might not be very straightforward when it comes to certain reporting because he will think, okay, if I report anything against these people, it is my job which is at risk. I will be losing my job. So I will not report this அன்றதுக்கு நிறைய வாய்ப்பு இருக்கு. We have seen many cases like that where the internal auditor is an employee of the organization. We see many stuff happening. So you need to first evaluate the objectivity based on the type of work that you are trying to get from them. Next, level of competency. Obviously, internal audit, anyone can become an internal auditor. And I have practically seen people with computer science degrees, people with commerce degrees, people with science degrees, people with various backgrounds have been sitting in the internal auditor position. It all depends on their ability to understand the business. If they are very good at establishing things, if they are very good at understanding the business, anyone can become an internal auditor. Only thing is, you need to have that understanding of audit, how to carry out the audits, so that they will get it with experience. And that is what management also makes use of. People who have this knack of, getting, finding things, or people who have this knack of getting things right. These people are generally pushed into the internal audit departments because they can really help the business grow. So it doesn't matter whether they are a certified person or not, whether there is it doesn't necessarily have to be a CA, but there should be something that should really shine through and say, okay, this person is really qualified to be there as a internal auditor. At one instance where we have seen, there was a internal auditor, but he whatever we ask, he will be like, you need to talk to the management, you need to ask this from the management, you need to ask that from the management. He was a qualified person, everything, he had a good track record, but then unfortunately once he joined this organization, his only response is talk to the management, because there was a lot of things they were going on inside the organization, and the manager, GM, was having a very tight control over things, and people were budging under pressure. So in these cases, obviously you cannot rely on the internal auditor's work because they are working under the guidance of the general manager, where there is every possibility of things being misrepresented. So one is objectivity, that is the independence. Second is the level of competency. Competency by default refers to the degrees, but then if the person is experienced, that can also be considered. Next, application of systematic and disciplined approach. That is basically documentation. When you see the report, when you see the documentation, you will obviously understand whether it is systematic or not. Based on the report, you can figure out whether a person has done proper work or not. So once you determine the adequacy, there are only two possibilities. Either you're satisfied and or you're not satisfied. If you're not satisfied, don't go ahead. If you're satisfied, now you need to determine to what extent you can use that report. Determine the nature and extent of the work of internal audit function that can be used. To what extent they have done some work, but to what extent you want to use it. So that is where this paragraph is coming in. Using the work of internal audit function. So first thing, whenever you're using the work of anyone else, you need to by default communicate to the other person, because this is a professional setting and this is professionals that we are talking about. So you need to give them adequate respect and treat them as equals and give them you need to establish that communication channels and say, boss, we are trying to utilize your work for this purposes. Kindly give us permission. And to what extent the work needs to be used, let us discuss. அப்படின்னு சொல்லிட்டு you need to first initiate the discussion with the internal auditor. Discuss the planned use of work of internal auditor. Second, read the reports of the internal audit function relating to the work of the function that the external auditor plans to use. To obtain an understanding of the nature and extent of audit procedures it performed and the related findings. So unless you go through the reports, unless you go through the documentation, you will not be sure as to what is the level of work the internal auditor has done for that particular area. So if it is a deep analysis, then obviously you can utilize it completely. If it is an overall analysis, you will need to establish whether the overall analysis is sufficient for your requirements. Then perform sufficient appropriate audit procedures on the work of internal audit function as a whole that external auditor plans to use to determine its adequacy for the purposes of the audit. So from the work that internal audit function has given, you may take some samples and carry out your own procedures and see whether it is matching with the report given by the internal audit function. So you do your own analysis, you go through the report, you do your own stuff, and then see whether overall, when you look at certain reports, it by default gives you the feeling of whether it can be reviewed or not. This comes with practice. So when you go through so many reports, when you go through so many documents, you by default know where exactly to look, what exactly to look for, isn't it? You will cut down on all the waste and your eyes will directly go to that required area only. Okay. So that is by default that comes with practice and with experience. So that is what happens here as well. When external auditor is reviewing, they will take certain areas only and then they will see, okay, whether this is in compliance with whatever is given by the internal auditor or not. If it is adequate, then go ahead. So next is evaluate whether external auditor's conclusion regarding internal audit's function and the determination of the nature and extent of use of the work of the function for the purposes of the audit remain appropriate. So you have done some analysis and you have concluded that this is utilizable or it is not utilizable. Now you need to establish whether that continues to remain appropriate, because the time frame sometimes has a you know implication over there, because the internal auditor might have given the report some 6 or 8 months back, and you are trying to utilize that report right now. So at this point of time, will there be still a validity for the findings that internal audit function has taken? Sometimes when the internal auditor report has come, immediately the management might work on the controls, and then they might modify things, and whatever the suggestions are given, they will try to correct them. So even if you rely on the internal audit report, if everything is corrected, there is no point you giving another disclaimer saying these are not correct. Anyways, they have corrected those things. Even if it is not in the same year, even if it is in a different financial year, they are corrected. So there is no point putting them on the report and scaring the investors, isn't it? So when it is corrected, you need to say it is corrected. You need to accept that it is corrected. So even if you do the sample analysis and then establish that the audit report is appropriate, there might still be another check that you need to do. So whether to establish whether the findings are still appropriate at the time point when you are giving the external audit report. So one is discuss with the auditor, then go through their audit reports, then do some sample testing, and finally establish whether it is utilizable for your audit report or not. Now they say there are two ways in which you can use the internal auditor's report. One is you ask them to directly assist you. You ask them to directly assist you. That is, you ask them to directly work for you. Okay. And it is only for a certain period of time. So what exactly is this? Using direct assistance of internal auditors. First one is determining whether internal auditor can be used to provide direct assistance. So first, there should be a check as to whether this can be done or not, isn't it? If not prohibited by law or regulation, external auditor may use an internal auditor to provide direct assistance if there are no significant threats to objectivity of internal auditor, and internal auditor is sufficiently competent to perform the proposed work. First, objectivity. By default, employee internal auditor and external internal auditor are completely different when it comes to objectivity. The employee internal auditor will definitely be under a lot of peer pressure, under a lot of management pressure for certain level of activities. But the external auditor doesn't have that objectivity issues. Okay. So first thing you need to establish is the objectivity. Second thing is competency. Naturally, if the person does not have the required degrees, if they are experienced in that field since the last 15 years, 20 years, obviously you don't have to worry. It doesn't always have to do with the degrees. It also is what exactly is the experience level also matters. So once you have established that, then you determine the nature and extent of work that can be assigned to the internal auditor. Now, during that assignment, what are the things that they cannot do? What are the things that they cannot do? It is what is defined by the standard. They are simply saying these are the things they cannot do. So except for this, everything else can be done by them. So what are the things that they cannot do? Involve making significant judgments in the audit. Wherever there is an area for significant judgment, those areas the internal auditors must not be involved to make a direct assistance. What is that area? Evaluation of accounting policies, evaluation of accruals, evaluation of expected credit losses. These are all areas where there is a significant judgment involved from the management's perspective as well as the external auditor's perspective. So these areas you cannot utilize them. For example, they have given you certain example areas. Assessing the risks of material misstatement. What is a material misstatement? அங்க யூஸ் பண்ண முடியாது. Next is evaluating the sufficiency of tests performed. Wherever you are using your external audit skills for certain level of verifications, you cannot utilize the services of internal audit in certain areas like say company law compliances. These areas, company law compliances, the internal auditor might not be very expert in that. Even if the internal auditor is an expert, you still have to do it by yourself because that is your core competence area. So if you give away your own core competence area, what is the whole point of you being there? So these are things where you need to step in and do the verification on your own. That is why they are specifically suggesting don't use the internal auditor in these instances. Second thing is evaluating. Third thing is evaluating appropriateness of management's use of going concern assumption. Like I said again, this going concern is one of the key criterias for the external auditor. So when there is a key aspect in your audit, it is your duty to carry out those activities. So that thing will be evaluated by the external auditor itself. You cannot use the internal audit over there. Next, evaluating significant accounting estimates and evaluating the adequacy of disclosures in the financial statements. So basically, if you see, these are basically the roles of external auditor. Technically, if you see, this is what the external audit does. Those are the areas you should not utilize an internal auditor. These are basically the areas where external audit expertise is. So they are asking you, boss, that is your own bread and butter. Don't try to hit on your own stomach. You do this work. Rest you can allocate to them. Next, second point is relate to higher assessed risks of material misstatement at the financial statement level. If there are any risks of material misstatement, the conclusion with respect to that cannot be provided by the internal auditor. The work with respect to that can be done by the internal auditor, but the conclusion cannot be provided by the internal auditor. It will be taken up by the statutory auditor. See, this is only for the reason that the statutory auditor wants to use the internal auditor. That means there is a division of 4 or 5 people in the internal audit department. So there will be a head, there will be manager, and then there are 3 staff who are working under them up in Vichkong. Now, for this purpose, there are 3 people, 3 internal audit staff இல்லையா? So the external auditor will say, சார் எனக்கு ஒரு ஆள் கொடுங்க சார், எனக்கு இங்க வேலை முடிக்க மாட்டேங்கிறது அப்படின்னு சொல்லுவாங்கல்ல. Under that one person, you need to do all these evaluations and you need to ensure that this person is not involved in these activities. Okay. So that is the reason they are being very specific as to what they cannot do. Next, relate to work which internal auditors have been involved. So already internal audit has involved and it is already working on it. Don't again involve them on the same thing separately. Next, relate to decisions external auditor makes in accordance with this SCA with respect to the internal audit function and use of its work or direct assistance. So you cannot ask an internal auditor if they can be hiring the internal auditor. You cannot ask the person that you are hiring if they are qualified or not. You need to do that analysis. You call them and say, qualified ani illa. Okay. Me qualified to you, are you qualified to work in this role? Yes na sonna, you will take it up on the face and do it. You have to do your analysis and you have to do your own assessment. So what are the areas where internal audit cannot be used? First is those areas which require a significant judgment in the audit. Okay, these areas you cannot utilize them. Second, where there is a high risk of material misstatement, that is with respect to the financial statements. And then third, where to work with relate to work which internal auditors have been involved with. That means either they have directly contributed in organizing or preparing that function, or they have already audited and completed that report. Let's say relate to work with which the internal auditors have been involved அப்படின்னா either they are involved directly in the operations, that is they have created a software for the operations அப்படின்னு வச்சுக்கோங்க. When they have created, they cannot audit their own work. Second thing is they have carried out the process audit of operations. Since they have already carried out the audit, you don't have to again use the internal auditor for the same purpose. Okay. Next is, and finally, if there is anything that you need from the internal auditor, don't take their decisions on it. You decide and then ask them to get the work done. Now, finally, this is all analysis stage. Finally, you have come to the stage where you are actually using their work. How do you use their work? First thing, using direct assistance of internal audit. Is my screen changing? Yeah. Using direct assistance of internal auditor. First one, prior to using internal auditors to provide direct assistance for purposes of the audit, the external auditor shall என்ன பண்ணோம், இவ்வளோ அனாலிசிஸ் பண்ணியாச்சு, இன்னும் ஒரு செட் ஆஃப் ஆக்டிவிட்டிஸ் இருக்கு. என்னது? obtain written agreement. From whom? From the entity. That internal audit will be allowed to follow the external auditor's instructions and the entity will not intervene. This is important. Will not intervene in the work internal audit performs. That means they will keep them independent. Next, obtain written agreement from the internal auditor themselves that they will keep confidential specific matters as instructed by the external auditor and inform the external auditor of any threat to their objectivity. So there are two agreements that must be formed. One with the entity that they will not interfere. Second, with the internal auditor that they will not compromise on their objectivity. And if there is any scope for compromising, they need to immediately inform. I have seen one company where one of the junior internal auditors that was coming there, he was related to the HR head. So initially this was not this was not aware in the organization. Later on, someone figured that out, and then they started questioning the internal audit reports issued for the HR department. Then the audit head gave a clarification saying this person was never allocated to the HR audits. He was involved in all other department audits, but he was never specifically, we never allocated this person to the HR related activities. I mean, they gave proofs and documents, then they were like, okay. So, Adhe Mari, this objectivity can be sometimes compromised, not just because of relations, but also because of certain pressures. So there needs to be two agreements, from one with the entity and one with the internal auditor. This has to be formally documented because you bringing in another professional in the middle. You are a professional. You are dealing with a professional. So keep it, documented. Have everything in documentation so that both the professionals know what are their limits. Next, the external auditor shall direct, supervise, and review the work performed by internal audit on the engagement in accordance with SA 220 quality standards. So you give them some work, you get it done as per the quality standard. Next is the direction, supervision, and review by the external auditor of the work performed by the internal audit shall be sufficient in order for the external auditor. What? The direction, supervision, and review by the external auditor of the work performed by internal audit shall be sufficient in order for the external auditor to be satisfied that the internal audit have obtained sufficient appropriate audit evidence to support the conclusions based on that work. Hmm. So what they are saying is if the quality standard is followed accordingly, if the quality standard is maintained, that is direction, supervision and review is done, then you can rely on the internal audit report, whatever is given by the internal auditor. Since the external auditor was directly involved in the direction, supervision, and review of the work, you don't have to again worry about the outcome. So this standard talks about two things. One is using the work of internal audit function or using the direct assistance of the internal auditors. This standard discusses about if you are using their work, talk to them, you see whether you can utilize their using their assistance instead of using the report. If you're directly using their there is a first lot of analysis needs to be made, whether they are objective, whether they are competent. Then there are certainly, and then finally there has to be an agreement, written agreement before utilizing them. And finally, you will get the work done as per the and review major theme. So that is all with respect to SA 610. Please go through the standard. Let me know if you have any queries. Let us start with the next standard, that is SA 620. So SA 600, 600 and SA 610 are talking about using the work of other auditors. Okay. One is statutory auditor, next is internal auditor. But now we will be dealing with a standard which is basically not an auditor at all. They are expert in their own fields and they are not auditors. If they are auditors, they will either fall under SA 299 or SA 600 or SA 610. If it is an internal auditor, by default, they will fall in SA 610 only. Okay. But if it is a statutory auditor, then there are two practical possibilities. One, they are working together at the same level for the same organization, then SA 299. But if they are working for the same organization but at different levels, then SA 600. One is auditing the head office, one is auditing the branch, then SA 600. But if both are auditing the same head office, then SA 299. Okay. So that is the basic difference between all these standards. Now, so let's go through SA 620 using the work of auditor's expert. Auditor's expert அப்படின்னா a person who is expert in their own field and where the auditor feels that there is a requirement to utilize their services. So, meaning of an auditor's expert. An individual or an organization possessing expertise in field other than accounting or auditing. So if it is accounting or auditing, they will either fall in SA 299 or SA 600 or SA 610. All the others will fall under SA 620, whose work is used by the auditor to assist in the auditor in obtaining sufficient appropriate audit evidence. Here, by default, whenever they are using the terms like auditor, by default, you need to understand that this is all statutory audit. All the standards, SA standards on auditing, by default, talk about things from the statutory auditor's perspective. Possessing expertise is important. That means they must be professionally qualified. Next, they have given certain examples where you can use the audit expert. Valuation of complex financial instruments, hedges, derivatives, and then they have these interest bonds these days where derivative is basically something you don't deal with the real asset. You deal with something that is dealing with the real asset. Okay. There will be a paper which will say the price will fluctuate like this. So let's deal on this. Okay. Now, the financial systems have gone so complex, so complicated that they were primarily one of the reasons why the financial meltdown happened in 2008, because they started creating derivatives on derivatives. So basically, what is happening is there is a real asset. Now, there are a set of people who are dealing with that and saying, okay, the price of this will move up like this, the price of this will go down like this. There are certain people who are discussing. And then there are certain, let's say, group B, which is discussing that the group A will make so much profit, group A will make so much loss. So basically, there is nothing, you're not dealing with the real asset. You stop dealing with the real asset long back. You are dealing with derivatives and derivatives on top of derivatives, which is creating a huge, complicated impact on the financial systems across the world. There are not many people who understand what is happening. One of the saddest part is that most of the government organizations don't understand the financial instruments that are used by the banks and the investment bankers. Because the pay is so low, you will not have quality stuff at the government level. And this is causing a big time trouble for the country at the last, because all the top guns will naturally sit at investment banks and banks where they will be getting very well paid. So they will create all these very complex instruments which only they understand how it works. Nobody else understands. So because of this, what happens is the people sitting in the government, they are not really expert enough to validate whether these things are appropriate, what kind of impact they will have on the economy. Even the policy making people, the way people who are the heads of RBI, FBI, even these people are sometimes unaware as to what is going on, because the instruments have become so complex these days, and that has partially led to what we know as the financial crisis of 2008. That was one of the most significant events, because these financial instruments started create putting so much pressure on Iceland. Iceland is where the country where the whole 2008 crisis came out. That country started failing, and only then people started realizing that there's a global financial meltdown that is happening. So these instruments started becoming so complex that the people who were able to manage them until that point, they did something or the other. But at some point or the other, things will fall down, isn't it? So Iceland was the first country to fall victim to these complex instruments, and subsequently, once one country falls, naturally there will be countries depending upon that, they will fall, and so on and so forth. There will be a card effect. So house of cards effect. So similarly, when you as an external auditor are trying to audit some complex financial instruments, that's not your expertise area. So it is always better you get someone who is an expert, get them to validate it, because the validation is required, because if they don't validate, whenever there is a complex financial instrument, it always by default results in a high risk of material mistake. So these areas you cannot ignore the requirement of a auditor's expert. You definitely need to push the management to hire someone for this work. Second, not just financial instruments, land and buildings, plant and machinery, jewelry, work of art, antiques, intangible assets acquired, liabilities assumed, எல்லாமே valuation பண்றதுக்கு there are people, there are consultancies which do the valuations. So wherever there is a valuation involved, get an audit expert. So next is actuarial calculations, They can be used with respect to insurance contracts or employee benefit plans. That I have already told you about superannuation, gratuity இதெல்லாத்துக்குமே வந்து there will be LIC policies that are available. Okay. So what happens with these LIC policies, Apina? What should I invest today so that I can pay 10 lakhs of gratuity 5 years down the lane? ஸோ அதுக்கு ஒரு பெரிய காம்ப்ளிகேட்டட் கேல்குலேஷன் ஒன்று இருக்கும். ஸோ பேஸ்ட் ஆன் தட் தே வில் டூ த அனாலிசிஸ் and subsequently next year they will see whether the return was made as per the expectations or not, and then they will revise their calculations and then issue a new report. So this is actuarial. And then we have estimation of oil and gas reserves. You can apply this to mines, any natural minerals, any archaeological sites, all of these areas, these estimations happen where that's a very interesting area where they use a lot of statistical mechanisms. Okay, they try to establish the area of the gas involved or the oil involved by various things. They will try to see what is the kind of effects people are having there, what is the type of water that is coming there, is it clean, is it polluted, what is the kind of trees that are growing there. Not just the direct analysis of the soil, they will also try to evaluate the environment over there, so that they know for fact that this is the mineral or material that is available. So some places where there is oil, certain types of trees don't grow. So they will see whether if this area contains oil, this type of tree should not ideally grow. So to what extent the oil reserve is spread in the ground, they will try to see by planting those trees or checking if that area has those trees, like this. They have a lot of analysis they do. And these estimations, not just oil and gas, you can take any natural mineral or natural resource, those estimations. Next, you have valuation of environmental liabilities and site cleanup costs. This is one of the standards in IAS talks about this. It must be there in India's as well. Most likely it is called as cleanup cost. No, exit cost, I think. Something on those lines of cleanup cost or exit cost. Basically, dismantling cost. So basically, you know that once this site has been utilized fully, you are getting into a lease for 20 years, 30 years, 99 years, whatever it is. Once this has been utilized fully, you know for a fact that you need to clean this area up. You need to clean up this whole area and then give it back. So when you know that this cleanup has to happen, it will be a significant cost at that time, the cleanup procedure. So you try to give a value to that and try to amortize that cost or try to accumulate that cost right from day one. So that is where these valuators come in, where they establish what would be the cleanup cost at the end. Interpretation of contracts, laws, and regulations. By default, you have lawyers for that. Analysis of complex or unusual tax compliance issues. By default, you have tax planning or tax compliance people for that. So these are the audit expert areas. These are only some examples. They did not talk anything about engineering here. You can think of engineers, you can think of site surveyors, you can think of lawyers, company secretary, cost accountants. You can think of who else? what are the computer science hackers, all these people who are specifically expert in those areas, you can get them to carry out these analysis. So let's next look at what are the audit procedures you need to do whenever you're trying to use the work or of a audit expert. You as a statutory auditor are trying to utilize the work of an audit expert with respect to some numbers or some disclosures in the financial statements. So what exactly is expected from you, Dina? First thing, determining the need for an auditor's expert. So you first need to understand whether there is a requirement to utilize the auditor's expert. So an auditor's expert may be needed to assist the auditor for the following. What are the following possible areas? Obtain an understanding of the entity and its environment, including the internal controls. So they are saying that even for identifying and understanding the identifying and assessing the risk of material misstatement, understanding the entity and its environment, even for that also you might need an audit expert. Second thing, identifying and assessing the risk of material misstatement. So there may be certain areas where the external auditor might not be very confident on. Unless an expert comes and gives an opinion on them, they may not be in a position to evaluate what is the materiality, evaluate what is the risk that they are facing, all that stuff. So you might have to involve someone and then see. There are certain Irani companies where Irani or countries where there are a lot of sanctions. Okay, now Russia has come into that picture. So when you are trying to audit a Russian entity as an external auditor, or you are trying to audit the subsidiary of an external auditor, the subsidiary of a Russian entity in India. So now you need to hire a legal person or hire a person who can tell you how these sanctions will affect your audit report or how these sanctions will affect the financial statements. Okay. There may be a going concern impact which you may not be aware also. So there must be someone who is a legal expert or something who can tell you, who can establish this for a fact that because of the so and so law changes, so and so legal regulation changes, there are effects and impacts on the business of the parent entity. So because of the parent entity, there may be impact on the subsidiary as well. So all these things will be discussed. So identifying and assessing the risk of material, determining and implementing overall responses to assess risk, designing and performing further audit procedures, evaluating the sufficiency and appropriateness of the audit evidence obtained. All these areas you might require a audit expert. And if you see, these are basically the things that an auditor does. So what they are trying to establish effectively is that anything and everything the statutory auditor wants to do, that place, if they feel that an audit expert is required, they can get an audit expert. That's all. So next, again, once you have established that you need an expert, auditor's expert, sorry. Auditor's expert means an external party. So once you have determined that you need an auditor's expert, you need to evaluate their competence, capability, and objectivity. Objectivity by default, you know that independence, irrespective of the profession, the very first thing that they talk about is independence of mind and independence of work. Competence and capability. Competence is, are you professionally qualified? Capability is experience. Is this person having adequate experience to deal with these kind of complex situations? So, how do you evaluate that? First is personal experience with previous work. You know that person in the market since many years together, you have worked. Lawyers and auditors together, company secretaries and auditors work together, engineers and auditors work together, all the professions work together. So you might be aware of someone who is doing this work, or someone who has um, been doing this work, and you have been involved, or you have been collaborating with them. The most frequent collaboration happens between company secretaries and auditors, lawyers and auditors. So you know that lawyer since many years, and you have been working together. You can take it for a fact that you can rely on him. Next, discussion with that expert. You can also talk to that expert and see if they can help you out. Discussion with other auditors. Maybe they will have their own sources for contacts. Knowledge of experts qualification, memberships and other forms of recognitions. This is all bookish. Then published books or papers, if they have published anything, then that makes a little difference, because they once you publish, you're putting your name out into the public, and people will be readily there to assess whether your report is appropriate or not. Next, auditors firms quality control policies and procedures. What does your firm talk about the hiring of an external party, or how to evaluate that external party, how to consider that external party as an expert? All those things you need to take into consideration. So once you have determined the need, you need to evaluate the expert. Once you have evaluated the expert, you need to understand what is the work that is done by them. So obtain an understanding of the expert work to enable the auditor to determine the nature, scope, and objectives of that expert work for auditor's purposes. Evaluate the adequacy of that work for the auditor's purposes. So basically, what they are trying to establish here is, you try to get a basic understanding of that work. They having a confidence on the work is fine, but you need to understand what exactly they will bring to the table by coming in for the valuation, or for whatever purpose that you are hiring them. And again, whenever you are using an external party, there has to be an agreement. The agreement has to be two-way or three-way rather. One one with the management, that they will not interfere, one with the external expert, that they will not get influenced by their and they will stay objective, they will stay independent அப்படினு ஒரு agreement வைக்கணும். Now this goes little beyond that objective clause. Here the nature, scope and objective must be defined. What exactly the auditor is expecting out of that expert. Second, roles and responsibilities of the auditor, roles and responsibilities of the expert. Nature, timing and extent of communication. What is the timeline that each of them is looking at? What are the periodic updates that will be given? How will the communication happen? Who is the uh, point of contact from both the parties? All that will be drafted. And finally, confidentiality, that is basically the objectivity. You need to ensure that the audit expert needs to ensure that if there is a threat to the objectivity in any form, that then that needs to be communicated immediately. And finally, once the agreement is in place, you will evaluate the you will evaluate the appropriateness of the expert's work. The expert will come and carry out the work. You will evaluate whether it is required or it is suitable for your work. Findings and conclusions, relevance, reasonableness, and consistency with other audit evidence. So, what exactly you're trying to do is you are seeing whether their conclusion is in line with your audit evidence or not. If they give a different conclusion, you need to see why they have given a different conclusion and where you have gone wrong. If they have given a conclusion in compliance or in collusion with your audit evidence, that means your analysis was appropriate. But if they give a different opinion, then you need to see where they went wrong or you went wrong. You need to evaluate. Next, assumptions and methods. Again, this I think I have given you an example where we we were using the actuarial report, and my colleague was trying to verify the documents that were given to the person. So that is the base data that was submitted to the actuarial auditor, and that person has wrongly taken 2020 instead of 2021. So that is where because of the wrong data that was considered, the end outcome of that was wrong. So accordingly, the report will have to be completely modified, isn't it? So the assumptions and the methodology that was utilized must also be evaluated by the auditor so that they know that, okay, this can be reliable, this cannot be reliable, this methodology will not suit, some other methodology must be applied. All that can be established. And finally, the source data. So this is in the reverse order. You can consider the source data, the assumptions and methods, and finally the findings and conclusions. All those things you can evaluate to see if you can use that audit experts work. So next, experts works not adequate for audit purposes. If the auditor concludes that the work of auditor's expert is not adequate for the purpose of audit, and auditor cannot resolve the matter through additional audit procedures, then it may be necessary to express a modified opinion. Say there is a legal complication, or say there is a financial instrument complication, conclusion on it. The auditor expert has given one report, but the auditor is not satisfied with this, their opinion or not. This has happened. I have seen one personal case with this. Um, the statutory auditor was reviewing something and they came across a document where some pages weren't on. Okay. So they hired our company to, audit and see from an internal audits perspective if we can give any insights or any different point of view or different opinion. And then we stepped in, we did a lot of analysis, but even the situation was so tricky that even we couldn't come to a proper conclusion with respect to that. Whether those two torn pages indicate the fraud or not, it was clear that when we had stepped in and carried out looked at the whole thing, we were able to give a certain different perspective to it, and certain things came to limelight, but nothing proved on paper. Okay, so because of the tearing of the evidence, nothing could be proved on paper as to what exactly happened there. Now, neither the statutory auditor is able to prove anything, nor we as an external party, we as a consultant could also not prove anything. strongly we could not prove anything. We could only give our assumptions and say this is the likelihood, this is the maximum likelihood அப்படின்னு சொல்லிட்டு we had to leave it like that. Now when it is just a likelihood, no one can use that report, isn't it? You cannot go to a court and say this guy says it is a likelihood, please file a case against him again. Court will say it get lost because it is just a likelihood. There is no hard and fact evidence that is there, isn't it? So no, it is a logical logjam where you neither statutory auditor is able to get to a conclusion, neither the expert is able to get to a conclusion. So because of this, now there is a certain risk factor with respect to this. If in that case it was a material mistake. Now in this particular instance also, the auditor has to evaluate if it is a material mistake, and then if it is material, then they need to consider having a or issuing a modified opinion, modified audit report. And finally, when you are using the work, you need to give reference. You are using the work of a external party, not just an internal party or an internal auditor. You are using the work of a external party. When you are using the work of an external party, obviously you need to tell people that, boss, this is the expert that helped us, and we have relied on their audit report. So, to what extent you need to give, and where you need not give under the Kutrganga. No reference required in case of unmodified audit report unless required by law and regulations. So sometimes the bar council will have certain requirements saying if it is certain types of cases, compulsorily the lawyer's name must be reported over there, so that if there is anything, the lawyer's opinion will come across and people will see the lawyer's opinion, and they will take a conclusion or their takeaways from it. So if there is any law or regulation like that which specifically says that the name has to be disclosed, then it will be disclosed. Otherwise, if it is an unmodified opinion, then it is not required. In case of modified opinion, it may be appropriate to refer to the auditor's expert, because since it is a modified opinion and you have relied on the auditor's expert, you need to say that, boss, this is the person who has helped me arrive at this conclusion. And since I am drowning, I will pull the other person also to drown along with me. Okay. So this will give the investors a much stronger confidence, because when auditor was not able to establish the risk of the material misstatement, the auditor's expert has come in, a third party has come and stepped in and given a report which says, yes, this has actually happened. So this gives the investors much better confidence that, okay, an expert is coming and saying that this is something is wrong. So then they will try to go through the findings given by the expert. So in case of modified reports, it may be appropriate to refer to the auditor's expert to explain the nature of the modification. That is where the importance is. The auditor's expert will also help the investors understand the nature of the modification. In such case, auditor may need the permission of auditor's expert before making such a reference. This is a tricky situation because I have personally seen one area where internal auditor internal auditor's work was used by the external auditor, and the internal auditor got a little greedy. So the external auditor requested if they can put the internal auditor's name, and the internal guy got a little greedy, and he was like, "Yes, yes, yes, go ahead." Now after that, believe me, it's been close to 7 years now. Because of one single reference in the statutory audit report of the company, the internal auditor is still facing the repercussions of that. There have been CBI raids, there have been income tax raids, there have been, police raids, so many things after his firm, after his home, after his companies, just because there was a significant fraud committed by the entity. Now, if the internal auditor was not greedy, and there was no mention of the name in the report, then there was no requirement for all of this to happen. But because of that single thing, he thought he will get publicity. Okay. He thought he will get publicity. But what has actually happened is the company has committed a very big fraud, and all the investors have filed cases against all the people, all the names in the report. So the statutory auditor was anyways doomed only. But the internal auditor also got doomed because his name was practically there on the report. Now, these are the reasons that needs to be considered, because once your name is put there, it becomes a public thing. And when it is a modified opinion, you need to be careful. If it is a negative thing, then you need to, I think it may be preferable to maintain your distance from such negative instances. But if the audit expert is confident that this will not affect him in any way, then they can say okay, and the audit expert will put their name saying, "This is the person who has helped me out arrive at this conclusion. And based on these factors, everything their thing will be commented in one of these sections." But if they are not confident, or if they are not happy with the disclaimer, then they will simply say, the statutory auditor will simply say, "We have utilized the work of auditors expert for so and so reasons and so and so purposes, and everything will be determined." So that is with respect to SA 620, using the work of an auditor's expert. So everywhere you have the standard patterns repeating. If there is a audit, if there is a person other than you, first thing always talk about objectivity. Second thing always talk about competence. First evaluate whether they are objective and competence. Next, you see to what extent you can utilize them, and the core areas of your core areas, that is your statutory audit areas, like risks of material misstatement, evaluation of risks of material misstatement, significant accounting estimates, materiality levels. All these are basically your areas. So, as a statutory auditor, don't try to use someone else for your areas, because that is your competence. You are supposed to do it. Next is utilizing their work. Whenever you are using an outside party, internal auditor or expert, try to have an agreement with the management, with the expert, saying the management should not interfere in the expert's work or the auditor's work, and the auditor or the expert will not get influenced by the management at any point of time. Even if there is scope for getting influenced, the external party or the auditor should immediately come and inform the statutory auditor that I am getting influenced, or this is what is happening, or they are trying to influence me through these routes. So at some point I might have to stop அப்படின்னு சொல்லிட்டு முன்னாடியே கம்யூனிகேட் பண்ண வேண்டியதா இருக்கும். So after having the written agreement, you try to look at their conclusions. What conclusions have they given? Conclusions la வந்து you need to see what is the source data, what are the assumptions taken, and what is the final conclusion arrived. So based on this, you determine whether you can utilize that conclusion or not. Are you happy with the conclusion? If yes, you can quote. If not, you need to see why it is not matching your expectations, or what exactly is causing the differences or deviations, and then decide upon the further course of action. So now if it is a modified report, you need to ask the expert whether they want their name there. If yes, you can give. Otherwise, no, you will simply have to say that it was done by an auditor's expert. And if it is an unmodified report, unless required by law or regulation, you are not required to do it. But then sometimes voluntarily people might be doing it because of publicity reasons. So that ends all these three standards: SA 600, 610, and 620. Okay, so you can go through these standards, and let's get back in 10-15 minutes. We will again start the class at 11:30. But I am available here in case anyone wants to discuss anything or have any doubts. You can reach out to me. I'm just online. Okay, guys, so let's start with SA 700. This is an important standard, so please focus on this. Kishore, you're saying something?
No, sir.
Okay. So I'm audible, right?
Yes, sir.
Okay, thank you. So this is an important standard, and this standard is what basically establishes how the audit report will look like. So, what is this standard all about? Forming an opinion and reporting on financial statements. So, this standard is particularly talking about two things. One is, how do you report in the financial statements? What are the minimum things that are expected out of you? And secondly, how do you decide which opinion to give? Whether a modified opinion, whether an unmodified opinion. If it is an unmodified opinion, what do you do? If it is a modified opinion, what kind of modified opinion do you need to give? All these matters, this standard is giving the guidance and saying this is what you need to apply. So this standard, naturally, when you're talking about an audit report, it will also define what exactly is an audit report. So reports in which auditor expresses his opinion on the financial statements. That is the very purpose of statutory audit. They are hired to give or express an opinion on the financial statements. So this opinion, if it is a general purpose financial statements, then 700, 701, 705, 706, that is the 700 series standards will apply. If it is a special purpose financial statements, there are 800 series also, which is not applicable to you at the moment. It is for final students. Now, what is general purpose? What is special purpose? Actually, at this level for you, it is not required to understand this, but I'm giving you for general information. Special purpose means, let us say you are located in India, you are auditing a entity subsidiary that is in India, but you have to prepare you have to audit financial statements that are prepared as per the US GAAP. Get me clearly. There is BMW company in India. There is Audi company in India. There is a Maserati company in India. There is a Tesla in India. Okay, so these are the examples of vechkom. When these companies financials are being reported, what will happen is the subsidiary will prepare two financial statements. One is as per the Indian GAAP, that is Ind AS use panni or financial statements prepare பண்ணுவாங்க. Second is they will use the gap of the reporting entity, the parent entity. Now BMW is in Germany. Okay. Now Germany or கேப் எடுத்து ஒரு ஃபினான்ஷியல்ஸ் ப்ரிப்பேர் பண்ணுவாங்க. அதுக்கும் இதுக்கும் ஸ்லைட்லி டிஃபரன்சஸ் இருக்கும். ஓகே, in the so the BMV entity in India will naturally prepare gap as per German gap, because for them to consolidate, that is much easier, right? And that is how they need to report it. So there will be two financial statements from the same entity. One is as per Indian gap, one is as per German gap. Now think of Tesla. When Tesla is trying to report, what will happen? They will use one, because they are here in India, they will use one Indian gap. Second, they will use the American gap, US gap. So there are two gaps which are being used. Gap, what is this gap? Gap, GAAP, GAAP, GAAP. generally accepted accounting principles. So Indian GAAP is Ind AS or accounting standards. US GAAP is IFRS, IAS. They will use that standard. But even they will not directly use this IFRS, IAS. They will also slightly modify IFRS, IAS to suit their requirements. Okay. So German GAAP பண்றது வந்து that IFRS IAS modified to suit the German requirements. So GAAP is the basic thing that needs to be considered. So when you are auditing the financial statements prepared as per the Indian GAAP, that will become general purpose financial statement. If you are auditing So that special purpose financial statements order opinion has been expressed specifically mentioned in the emphasis of matter and other matter paragraph. So it is not affecting the audit opinion, but it is giving the investors an idea that, boss, there is two different audit reports. So all these things where it does not affect the audit opinion, but it is helping the investors understand certain matters and aspects. Those areas, the emphasis of matter and other matter paragraphs will be used. So subsequently, whatever we want will be covered in SA 705 and 706. So for now, let's move on. Now, this is where the standard becomes very clear as to what they expect. What is it that they exactly expect in a audit report, Abdina? The elements of an unmodified audit report. These are the standard headings. These are the standard headings that are required to be used in any audit report issued by a statutory auditor. First one, the by default, the title has to be this: Independent Auditor's Report. By default, this is the title everywhere, irrespective of modified or unmodified. This is by default the title. And that is what I say 200. That is why all this series start with that. Independence is the first and foremost important factor for any professional. When you are in your going in, sitting in any place, in anywhere, any time in your life, try to be independent. Don't get influenced by people. If someone is asking you to do something wrong, stay by your words, stay by your principles, and say, boss, this is wrong. It doesn't matter which level of boss it is. If you comply with them, what will happen is ultimately you will be in trouble. If you do not comply with them, there will be a better chance to say that, okay, this person has maintained his integrity and he has ensured that this level of fraud does not happen. So that is something that is more important, because the people who are reading your audit reports have placed extreme trust on you. They are making their investments based on your audit report. So you are playing with the future and money of many people. So keep that in mind and be independent and issue actually an independent audit report. Independent auditor's report, that has to be the title. Second, addressee. Addressee means to whom this report is being addressed to. Generally, it will be addressed to the board of directors or the management of the entity that you are auditing. But in certain rare cases, what happens is the government might officially ask you to issue an audit report. Let's say there is a court, there is some court case that is going on, and the court has directed you, as they have hired you, and they said, boss, prepare the audit report for these financial statements. So in those cases, you will address the honorable judge or of the court that is applicable. Otherwise, if it is a committee, then the committee. If it is a particular government organization, then you will address it either to the comptroller auditor general or to the particular minister of the particular department. So it depends on who is requesting that statutory audit report, who has hired you. You will address them. It is not always the management of the entity, it could be a different person as well. Next, there is a opinion section where this is where you will give the actual opinion. What is this opinion section? The financial statements have been prepared in accordance with the financial statements prepared in accordance with the financial reporting framework have expressed a true and fair view or present fairly in all material aspects. These are the standard words that are used. Okay. So the most important thing for this standard is you need to memorize the paragraphs. Okay. You need to memorize how to write the paragraphs. So essay 700 series there are certain areas where the paragraphs are required to be drafted by you. So question appadi varalam, asking you to saying this is the situation, this is the so and so situation. Draft the emphasis of matter paragraph, draft the other matter paragraph, draft the opinion paragraph அப்படின்னு question வரலாம். Okay, so you need to keep that in mind and memorize these paragraphs. This is important. Now, when there is a fair presentation framework, that is, when you are saying that it is a true and fair view, then you have to talk about it like this. In our opinion, that is always how it starts. The opinion section by default always starts with these words. In our opinion, the financial statements present fairly in all material respects. Abdina, the financial statements give a true and fair view. Okay, that is what it means. Present fairly in all material respects in accordance with the applicable financial reporting framework. Applicable means you cannot write applicable financial reporting framework. You have to write the in accordance with Ind AS. So here for India, it is applicable financial reporting framework is Ind AS. But if it is a special purpose financial statements, then you have to write US GAAP. Here you can write Indian GAAP or you can write Ind AS. So in our opinion, the financial statements present fairly in all material respects in accordance with the Ind AS or Indian GAAP. That is your opinion. That is an unmodified opinion. Okay, this is what an unmodified opinion looks like. Second, you can also write it like this. In our opinion, the financial statements gives a true and fair view of the financial statements prepared by so and so entity in accordance with Indian GAAP or Ind AS. So either you can write present fairly in all material respects, or you can say give a true and fair view. Now, what is a compliance framework? In that you can say, in our opinion, that is where it starts with the financial statements present in all material respect in accordance with the financial statements present. Here you need to include the word compliance. In our opinion, the financial statements comply in all material respects in accordance with certain applicable financial reporting framework. That is, like I said, there might be requirement from the SEBI, from the court, from the government, from any particular legal body asking you to issue a financial the audit framework. But otherwise, when you're talking about true and fair view, it is called as a fair presentation framework. So this is what the opinion paragraph should look like. This is what you need to memorize. First, it should always start like this. In our opinion, the financial statements present fairly in all material respects in accordance with Indian GAAP. Or if you want to expand this a bit, the financial statements of the XYZ LLC present fairly in all material respects in accordance with Indian GAAP or Indias. You can include certain details here about the entity and stuff. So this is what the starting should look like. Then the opinion paragraph shall also cover the following. What are the things that needs to be covered? Identity of the entity. Identity of the entity. So like I said, here I have included the identity additionally. Then identify the title of each financial statement. It is very, very important. Like I said, when there are multiple financial statements, there is a general purpose, there is a special purpose. You need to specifically mention as to which financial statement you are talking about. Then specify the date or period covered by each financial statement. So let's go back and modify that slightly. So specify the period or date and then state that the financial statements have been audited. So what are the things that the opinion paragraph should contain? One is this paragraph which should cover the identity of the entity, the identity of the title of the financial statement, identity of the entity we have included, the title of the financial statements, the general purpose or whatever the title of the financial statement is, that needs to be come in. Then the period has to be brought in, period ending so and so, and then finally state that the financial statements have been audited. After this, you need to write saying they have been audited in accordance with the standards on auditing and the applicable auditing reporting framework. Auditing reporting framework அப்படின்னா for the purpose of audit, what are the guidelines you follow? Standards on auditing, ICA publications. Then you have laws and regulations. That is what you follow. So auditing reporting framework. So this is the paragraph that you generally need to remember. Don't write all. You have to write any one thing. Indian GAAP or Indian. Yes, this is what you need to generally memorize for the purposes of the exam. It always starts with in our opinion. The general purpose financial statements of the XYZ LLC for the period ending 31st March 2022 present fairly in all material respects in accordance with the whatever the financial reporting framework is. Okay, so those are the aspects that needs to be covered. Now let's move on from the opinion paragraph and see the basis for opinion paragraph. So first there is title. The next paragraph will be the addressee to whom it is being addressed to. Then third will be the opinion section. Once you have given the opinion simply says whether it is true and fair or not, whether it is modified or unmodified. That is all you need to say over there. This is a unmodified opinion. We are, in our opinion, the financial statements present an unmodified opinion. In our opinion, the financial statements present a modified opinion. That is what you need to say here. And then the explanation to that comes after this. Immediately after this, there is a basis for opinion paragraph. In the basis for opinion paragraph, why you have given an unmodified opinion, why you have given a modified opinion ன்றது வந்து இங்க வந்துட்டு explain பண்ணணும் as to what exactly the difference is, as to why there is a unmodified opinion, why there is a modified opinion. Here you need to state that the audit was conducted in accordance with the auditing reporting framework, that is the standard on auditing. Next, refer to the section of auditor's report that describes the auditor's responsibilities. There will be a separate section called auditor's responsibilities, which will be describing all the duties and roles and responsibility of the auditor. So you need to give a specific reference to that, saying our audit report has been prepared in accordance with the standards on auditing. Our roles and responsibilities are these. Our ethical requirements, including independence, have been complied. Okay. Auditors, believing that they have obtained the sufficient appropriate audit evidence, that is the basis for our opinion. So this is what you need to write there, saying these are the factors which we have taken into consideration before giving this opinion. So the opinion that was described in the previous paragraph has been achieved by these following factors. Abdini, you need to write about this in the basis of opinion paragraph. Now title, addressee, and then opinion paragraph, basis of opinion paragraph. Now come further. There will be a going concern paragraph. Immediately after the opinion, you need to talk about the going concern. Going concern, what is the thing? We believe that the entity's going concern is not affected. Okay, when this line is there, then it means that for the next 1 year there is no effect. If you feel that there is a going concern impact, you need to write as to why there is a going concern impact, why you feel that there is going to be a going concern impact. All of those details you need to provide here. Next, key audit matters. What exactly are key audit matters? Everything will be discussed tomorrow in the next class in SA 701. Next, management's responsibilities for the financial statement. So just like how there is an auditor's responsibilities, just like that there will be management responsibilities, isn't it? Those management responsibilities will also be described. These are standard things, that is a copy paste only. Here it is not something that's very unique, because they are the ones who are responsible for preparation, they are the ones who are responsible for maintaining the records, so they are the ones who are responsible for the estimates, they are the ones who are responsible for the internal controls, they are the ones who have to ensure that there is going concern, they are the ones who have to ensure that the financial reporting is appropriate. So we will just put the liability legally on them by making these sentences, by putting these sentences in the report. We are legally establishing that these things have to be actually carried out by them. If there is anything, first catch hold of them before catching hold of me. Now, what is the auditor's responsibilities? அதுக்கு வந்து ஒரு பெரிய paragraph வரும். First, state the objective of auditor to obtain reasonable assurance. State that the objective of auditor is to obtain reasonable assurance that the objective of the auditor is to obtain reasonable assurance that the financial statements as a whole are free from material misstatement and issue the audit report that includes the audit report opinion. This is what the objective is. This is what the statutory auditor is hired for. What is it? This is what you have to say. This is what is expected from you. Financial statements as a whole are free from material misstatements. This is what you are expected to give. That reasonable assurance. What is that reasonable assurance? You are not saying, yes, these are free. You are saying, in our opinion, we believe that the financial statements as a whole are free from material misstatement. Or in our opinion, we believe that the financial statements present fairly in all material aspects. Abdina, we are giving a reasonable assurance only. We are not confirming. So this is what will be described in the auditor's opinion paragraph. Next, what else is expected? Explanation with respect to the reasonable applying insurance and application of the concept of materiality. That is the basis of opinion paragraph. All that will be described in the basis of opinion paragraph. Then first here they are talking about the opinion paragraph, then they are talking about the basis of opinion paragraph. Then the statement that the auditor exercises professional judgment and maintains professional skepticism throughout the audit. This is also basis of opinion paragraph. Here you will say that, boss, I have maintained my integrity. You cannot question my integrity and objectivity. I have maintained my professional, skills like independence, everything I have maintained. And on top of that, I have also used my professional skepticism. There may be a cause for confusion or, skepticism, abdina, questioning mind. So there may be areas where there was a requirement to audit further, and I've taken those precautions and steps. Only after that I'm arriving at this judgment. I have been a skeptic throughout the audit of or audit or line item. Next step. How exactly you have conducted the audit? How did you identify and assess? How did you design and perform the audit procedures? How did you obtain the audit evidence? How did you evaluate the internal controls? All of this is what is your duty as an auditor. How do you express your opinion on the internal financial controls? This is one thing that has to be done. Either the CARO or the audit report. You have to specifically report saying we believe that the internal financial controls are adequate. There is a difference between internal controls and internal financial controls. Please understand that the statutory auditor is responsible to evaluate the internal controls surrounding the preparation and submission of the financial statements. That is why they need to comment only on the internal financial controls only, not everything, not all the controls of the organization, only the internal financial controls. So what is your opinion about the accounting policies and accounting estimates used by the entity? What is your thing on the appropriateness of management's use of going concern basis? How the financial statements have been presented? What are the disclaimers used? What are the disclosures provided? Whether all of that is in compliance with the laws and regulations? All of that you need to talk to in the audit report. Next. There are certain other things. State auditors' responsibilities with respect to the matters communicated to those charged with governance. What exactly are the things you discussed with the audit committee? You need to also provide a statement to the audit committee on compliance of those ethical requirements, that you have been independent, you have been objective, you have not, done anything non-ethical, you have complied with everything under the or statement கொடுக்கணும். And then determining key audit matters. Out of the matters, those to communicate it to those charged with governance. See there, you will take only the material matters to the audit committee. And out of those material matters, there might be certain matters which require to be specifically highlighted in the audit report. And that is what becomes your key audit matters. So these key audit matters we will discuss in the applicable standard. There you will get to know what exactly they are. So finally, after all these responsibilities, there is other reporting responsibilities where it comes out of law, where any legal requirements, any regulatory requirements are there. All that will be described here. Whatever Caro reporting is there, everything, the entire Caro, everything will come over here. Next, finally, will be the signature, the place for the signature, where firm and the membership and the firm registration number. If it is from a firm, person name, firm name, person's membership number, firm's registration number, all of them have to be there along with the official seal. Next, the place, the city where the audit report is signed. This is very, very important because this has created many legal troubles for many chartered accountants. You need to actually write the real place of signing the audit report. There have been instances where recently it happened that this thing is so important. This small paragraph is so important that it can really change the course of some uh, legal cases. Recent thing that I can remember is there is this guy B.R. Shetty, okay, from Mangalore. He has come to UAE and established something called as he has established one healthcare business, okay, NMC. NMC is one of the major hospitals here. Okay, it is a major healthcare distributor, a major healthcare retail, major healthcare labs, major healthcare hospitals. NMC is known for quality here. So just like how we rely on Apollo or how we rely on Dr. Reddy's or how we place reliance on certain big hospitals in India. Same like that. Here, NMC Abdina, it is the in Dubai or in UAE. NMC is like the quality standard in hospitals. Okay. So this guy, one single guy, has come and created this empire. Now, what has happened is unfortunately the very close associates, the CFO and CEO, they have somehow done some frauds and big level frauds, and they have got this guy into trouble. Now the entire management was uh, under scrutiny, and all of them fled from UAE. So they were taking asylum in other countries and trying to file or fight against the International Court of Law. The COO and CFO are by default escaping there. They are not reported since the time the case has been filed against them. But B.R. Shetty has been fighting for his innocence right from the start. He was trying. Finally, one small point they found out that there was a bank authorization that was given by B.R. Shetty. Okay, the signature of B.R. Shetty is over there, and the place of signing everything is mentioned as Dubai. Okay, and on that particular day, B.R. Shetty was not in Dubai at all. He was not in Dubai at all. He had this ticket proof, everything, images, ticket proof, his personal, whatever social media posts, everything was there. He was in a different country that day. So the entire day he was in a different country, but his signature place and it was an electronic signature. That is the best part. It was an electronic signature made in Dubai at a particular time, during which time he was not there in the Dubai at all. So that completely changed the course of the legal action, because till that time everyone, all the international agencies were behind BR Shetty because he is the big guns, he is the chairman of the company. But unless proven that you are not guilty, you cannot, evade all these people. All of these people will try to recover their monies, because it is almost close to some $3 billion that they need to recover. So naturally, $3 billion is a very big amount, and everyone was behind this guy BR Shetty. But after this single proof, the entire thing turned, and now people are trying to find the CEO and the CEO of the CFO and the CEO of the company. Because it is very clearly evident that there was some forgery that has happened, there were some fraudulent instances that has happened, and these people were involved in that thing. So this place, I'm giving you one example which is not an auditor at all, but just imagine, for auditor also it makes a huge role. Same thing, if auditor signs there something, and he's in a different location or anything, it will make a big impact on his professional career. It can either make or break his license, அந்த மாதிரி situation வந்துரும். Okay, so this thing is important. Next, date also, the date needs to be very clear. Last week there was one previous student who debated with me for almost 2 days. I think we were constantly in debate about this date. So he was saying that this date of a report and tax audit report and this date of a report has to be same, it cannot be different, all that stuff. So we were discussing as to which exactly should be first, which exactly, as per the legal requirements, what can be first, what can be later, whether they have to be on the same date, all of this. So not just from understanding when this report was given, but also from a legal perspective, this makes a lot of difference. The signature, place, and date have a lot of significance when it comes to the legality of it. Okay, so this is the end of the standard. So these are the paragraphs that needs to be basically covered in any audit report அப்படின்னு ஒரு base criteria கொடுத்திருக்காங்க. So we'll just go through that and we'll close the class. First, the title. Title is compulsory. Independent Auditor's Report. There is no other possible title. That is the only possible title. Independent Auditor's Report. அவ்வளவுதான். Next, addressee. Addressee can change from company or whoever has hired you. You have to address them. Opinion section. Fair view or modified opinion or unmodified opinion. That is the opinion you give here. First give the opinion, that's all. Give an opinion. Then come to the next paragraph, which is basis for opinion. There you come and explain why you have given that unmodified opinion or a modified opinion. After that, you talk about the going concern. After that, you talk about the key audit matters that were discussed. And then you talk about management's responsibilities and your responsibilities. That is the auditor's responsibilities. And finally, we have other reporting responsibilities. That is, as per the legal or law requirements, whatever the responsibilities are there. It's not always just Caro. There are some other areas where SEBI requirements are there. Some companies, the auditors need to do this extra reporting. So those things needs to be taken into consideration here. And then finally, the signature, place, and date. All of this needs to be brought into the audit report. These are the basic headlines, the basic paragraphs that has to be there in the audit report. Anything else, you need to communicate within these paragraphs. 99.99% of the time, the auditors will not add additional paragraphs. They will try to communicate all the required information within the given paragraphs only. And these given paragraphs are sufficient. So this ensures that there is a standard format in which the investors read. So when investors start reading multiple audit reports, when there are standard headings, they know that okay, this is where this information I need will be அப்படின்னு ஒரு ஸ்டாண்டர்ட் இடத்துல போய் அவங்க செக் பண்றதுக்கு வாய்ப்பு இருக்கும். Just like how we have a standard format for the financial statements, this basically is a standard format for the audit report. So this entire week will be taken up by me. So whenever the audit class is complete or whenever there is too much bore in the audit classes, we'll try to switch over to the FM classes. There is one chapter which I've left, that is the working capital management. That also we will do in parallel. Okay. So Max today is 6, right? Max by 15th we should be done with everything. I'll try to close it even earlier. So tomorrow we have a class. Let's try to have from 6 a.m. to 9 a.m. daily. Please try to log in on time so that the standards that you're going to look at now will all be, very critical. All the 700 series, you need to remember the paragraphs. So here I will explain what will be the elements of the paragraph so that it becomes easier for you to have that in your memory. So that's all for today. We will close here. Thank you guys. Have a happy Sunday. And the second session today I cannot continue because I have some works lined up, official works. So FM class today it will not be possible. We will try to cover it during the weekdays itself. Okay. Thank you everyone. Have a good day. Mm. Thank you, Leo.